October 10th, 2025, one of the most violent liquidation events in crypto history, with roughly $19 billion wiped out in under 24 hours. So today we're asking, is Binance successfully defending the position that they have, or is it losing control of the narrative surrounding one of crypto's most dramatic crashes? Have you seen crypto Twitter in the last couple of days? Is Binance losing control of the narrative around the October 10th crash? That's what we're going to be speaking about today. Now, Binance, the world's largest cryptocurrency exchange, isn't just defending itself anymore against criticism, is fighting a full-on narrative. A narrative that suggests that the October 10th, 2025 flash crash, which wiped out tens of billions in leveraged positions, wasn't merely market conditions, but that the Binance's platform issues played a significant role in worsening the fallout. This time, the criticism isn't just from anonymous accounts on the margins of the crypto space. It's being echoed by big names, big institutional figures, big names in finance that make Binance's defense even louder, even more emphatic than before. So today we're asking, is Binance successfully defending the position that they have, or is it losing control of the narrative surrounding one of crypto's most dramatic crashes? To understand why Binance is reacting so forcefully, you need to understand its position within the cryptocurrency ecosystem. So for millions of traders around the globe, Binance is crypto. It's got the largest trading volumes, major stablecoin holdings, one of the first exchanges that a lot of people would have used to take that first step into the whole crypto world. So when Binance is accused of contributing to a market crash, the damage isn't just reputational to, say, one company. It kind of creates like a systemic wide risk. And that's exactly what happened on October 10th, 2025, one of the most violent liquidation events in crypto history, with roughly $19 billion wiped out in under 24 hours. So let's break this down. The October 10th crash wasn't just a small wobble. It was a seismic sell-off that rippled across every major cryptocurrency. And here's what we know from verifiable sources online. Macro shocks triggered the initial drop. The market was already jittery at the time, and there were a lot of broad macroeconomic factors involved, including global equity volatility and geopolitical stress at the time, that all put pressure on leveraged positions. Now, Binance experienced serious technical issues during this peak volatility at the time, and according to official statements and independent reports, Binance confirmed its systems came under extreme load and some platform modules glitched, causing delays in transfers and pricing anomalies at the time. Some tokens appear to trade at extreme values due to internal display and pricing bugs, not because the asset's true market value had actually collapsed. This included temporary false prices on the exchange, which triggered forced liquidations and broader stress across the whole plethora of the cryptocurrency market. And then we had crypto forums users reporting that they were unable to exit positions or execute orders. This is a common experience amid system overloads on major exchanges. Binance compensated affected users. They publicly said that they paid out a compensation of roughly around $283 million to users that were impacted by this depegging. There were also follow-up relief initiatives totaling hundreds of millions to rebuild trader confidence. And that's actually what Binance are trying to do now. They're trying to rebuild trader confidence. It's like a FUD confidence battle at the moment. Now, some traders and analysts on social media and Reddit have framed the crash as evidence of structural or system failure inside Binance itself, rather than purely macro event. Now, these voices have argued that there were system lags, user interface errors that disadvantaged retail users, temporary price disruptions that triggered disproportionate liquidations. Now, the exchange's internal pricing mechanisms lacked external oracle checks. At the same time, high-profile figures revived the discussion recently, suggesting that October 10th's crash was more than market mechanics. Now, Binance is pushing back on all of this and calling it FUD. The exchange says its core systems remained operational throughout the crash. It attributes price swings to the macro market forces at the time, leveraged liquidations, not platform failure. Now, CZ at Binance and Binance spokespeople have dismissed some online criticism as FUD, not grounded in fact. Now, in a recent Q&A session with CZ, he explicitly rejected claims that Binance was responsible for the October crash, and he reiterated that the sell-off stemmed from broader volatility and leverage stress, not intentional platform manipulation. So where does that leave us? This isn't just about whether Binance had temporary system load issues. Everyone acknowledges that in extreme strains and stresses, every exchange will have stresses. What's at stake now is narrative control, because industry leaders question whether a centralized exchange's infrastructure has exacerbated a historic crash, and social media, when you add on all the social media speculation, it's amplified. It becomes mainstream commentary, and Binance feels compelled then, obviously, to publicly deny responsibility and defend its own reputation. And you get a battle of narratives which is playing out at the moment. It's not just a dispute over a technical issue. And that's dangerous in crypto, as we know, where sentiment and confidence moves markets almost as much as fundamentals, possibly even more than fundamentals. So what's actually happening here? This isn't some sort of feud between Binance and Tether that was going around for the past 24 hours. It's not a spat between ZZ and Paulo from Tether. That's been dismissed. There's no credible evidence anyway that any executive from Tether has blamed Binance for the crash. In crypto, though, perception drives markets. And when the largest exchange in the world thinks a narrative threatens confidence, it's not just FUD to them, it's a market risk. So watch out there. Look on crypto Twitter, Stacks Ads.